everybody, Tom Berry here with a real quick update on our real estate funds. So almost a quarter has gone by since I've done an update, and just wanted to get this out to you to let you know how the Growth Fund, Income Fund, and the Equity Fund Class A are doing right now. So in about another 6 weeks or so, we will be through the quarter, and won't even be 6 weeks now. 2 to 3 weeks. We'll be clear through the quarter, and we'll have all the finalized numbers so that I can give you detailed information. But for today, I can certainly tell you that we are on track on the Growth Fund. The same track we've been on for a couple of years. Really no changes there. Minimal change up and down over the last couple of months. Of course, you get your monthly statements, so you know that. Don't see September being any different than the last 2 months either. Same thing on the Income Fund. Everything is just running pretty steady. We don't have a lot of new capital that we have been investing in notes, so I don't think that that is going to change much over the next few months. We have seen, now we haven't had any outflows of capital, but we were running at a pace of about $5 to $6 million new dollars per month coming into the combination of Growth Fund and Income Fund that we were buying new notes with. Now that number is probably down to about $1 million a month in new money that we're buying notes with. So I am hopeful that people will be less fearful, and they will see that these returns have not changed based on interest rate changes. And what little change we have seen has been a good change, because we're on the lending side of the equation. And on the lending side of the equation, you kind of like high interest rates, right? That's where our income comes from for those two funds. So I am hopeful that we'll get back up to, at least 3 million, 4 million in new capital a month coming in. And what that will do is allow us to buy notes at the new higher rates, and that blended in will just kind of continue to raise our interest rate average on those two funds. But even if we don't have, we still have a solid pool of notes and solid returns that you'll be seeing here in the next month or so. On the Equity Fund, Class A, that's the Dayton, Tennessee Shopping Center, our first shopping center that we've done with investors, not our first one we've done. That property, we have had some developments. We are now under contract to sell about $1.1 million of extra land, the old car wash, and the coffee shop. So that chunk of land, for those of you that are invested in that, if you go back to your slide deck that we shared with you, you'll see that as out parcel 2 on your slide deck. That chunk of ground we have under contract for $1.1 million. It should close by the end of this year. And we also have an option for out parcel number 1, and that option, they have paid us $50,000 non-refundable option fee, and that gives them the right to purchase that piece for $550,000. That 50 option fee would go towards that. So we'll get another $500,000 if they exercise that option, and I gave them 15 months to do that. The reason they needed so much time on that is they want to put a hotel there, and we believe that's going to be a fantastic addition to the shopping center. Even though we won't own that land or the hotel, it's still in our center, and what it does is just brings more traffic in, and that traffic benefits our tenant base. So we think it's a great opportunity for us to reduce our cost basis in this deal. If both of those close, that's another $1.6 million off of our cost basis of $7.725, which just takes us down to really, really low cost basis for what we own there. And I couldn't be more excited about it. And understand, for those of you in this center, none of that was taken into consideration when we did our projection. These are just extra bonuses that we were looking for ways to overperform the numbers that we were targeting. So on all fronts, whether it's the growth fund, the income fund, or the equity fund Class A, we've got phenomenal news across the board. What we want and what we see is we would love to see more capital in the growth fund and income fund so that we can blend in some higher return notes that are available with the notes that are already in those funds, and that will increase those returns a bit over time. And then on the equity fund, we have 3 additional deals that we are in the due diligence phase now. I don't have anything to share with you. I don't have one to tease you with. I wish I did. But I would say over the next few weeks, we will certainly have Class B identified, and we'll be able to share that. Very exciting news in that realm, in the actual equity side of things. We're seeing cap rates climb. We're seeing them climb actually higher than interest rates are climbing, and that delta is where the profitability is, and that's what we're really watching right now, is we're watching for that delta to get up above what our threshold is, and at that point we're going to start capturing a lot of property. So I hope you'll be with us on those, and if you know anybody else that should learn what we're doing here at ILS, please share this video with them. And this is not a solicitation of any type. A solicitation can't be done without a proper PPM and all the other disclosures, but I'll see you in a few weeks with the actual end of quarter numbers and a detailed explanation of where each of those funds are.